Hello everyone, this is Kim Lei with A2Q2, and in this video I'll outline the recommended actions for a company that's preparing to go public or a pre-IPO company getting ready for their public company readiness initiative for the fixed asset process. And I'll outline the sub-processes and the activities. So what you see over here at the top is going to be the typical activities we recommend is assessing the control gap. So understanding the current process as it's happening today, what key controls are happening or key activities are happening, and assessing those gaps. Next is documenting the processes and controls. Within the last 2 to 3 years, more and more external auditors are requesting that companies document their controls in flowcharts. If you have narratives, then that was something that several years ago was very common. Now, if you do narratives, they may still require you to take some of the key processes and do a flow chart so that visually they can see it. And that requirement really comes from the recent audits that the external auditors have had by the PCAOB. And so because they've had that requirement, they're now asking their clients to do it, which impacts you. The other activity, once you've done the gap, once you understand what your risk and controls are, is what we call the risk control matrix, creating a risk control matrix or an RCM. That's really a listing of all of your controls. There's more complexity to it, and in a separate video, I show you what a typical risk control matrix would look like and the different fields that are required. Next, in terms of activities, is conducting a walkthrough. A walkthrough is a show and tell where you can actually ask the process owner, show me how you initiate a transaction from the beginning all the way following that whole process until it gets reported into the general ledger and gets disclosed as well. Also known as test of design. Highly recommended because what we often find is that what people tell us in an interview by inquiring is can vary greatly when we actually see it on paper or on screen how they do it. So the paper, the way it's written, and how someone's actually doing it varies. Also known as test of design or TOD. And finally, this is only optional. I don't see a lot of companies in their readiness phase doing testing of these controls. It's not that they don't want to, but it's because it can be very time consuming, and most of the time their companies are making sure they're putting the controls in place, they're doing the controls, and doing the walkthrough is enough. There may be areas of high risk that as a company you may decide that you'd actually want to do it, but as a private company you're not required at all, and even as a first year public company you're not required to do it at all. So that's why companies typically don't do testing of controls when they're private. Now, what you see here are 9 sub-processes or areas that we typically would cover in the fixed asset process. There is your capital expenditure policy, and that includes your, or otherwise known as your CapEx policy. That's what's the threshold to capitalize? What are the categories of assets? What are the years or the depreciation lives or the amortization lives? Having it in a policy that's documented, reviewed periodically is something that's covered here. Your fixed asset additions is another sub-process, very key. And included in additions is also making sure that it's coded to the right categories, because at the end of the year you're going to need to disclose the types, whether it's leases, computer equipment, furniture and fixture. So categorizing it is important. Next is going to be asset disposals. So removing assets when you're no longer in use, or maybe it's you're closing certain facilities, making sure that also comes off your books. That's what that sub-process would document. Depreciation expense calculation. Typically that is now done either Excel for the smaller companies or companies where fixed asset is not critical. Most of the time, it's actually in a system like NetSuite, like Oracle Cloud, Oracle, or SAP. And so the calculation of depreciation expense is important. What the number of years, so the cost divided by number of years, is it being amortized properly? That's where you want to focus on. Some companies have internal use software, also called internally developed software. And so what's their capitalization? How do they make sure that they capitalize those items? And in a separate video, you can find information, a deeper dive into internal use software and the periods when the expenses are expensed, or the costs are expense, or when the cost can be capitalized, when you start and stop that, and then making sure you monitor how you capture that. And then once an internal use software has been capitalized, the amortization. Usually the amortization is much easier because that's typically monthly over the life of that asset. And so it's similar to depreciation. Intangible assets often belongs in or is grouped in fixed assets as well, and that includes the impairment, and that could also be potentially goodwill or goodwill's other assets, but sometimes from a grouping it together. So not only do you have your intangible assets, the value and the amortization, but also the impairment that needs to be done at least annually, or monitoring events quarterly to see if a write-off might or impairment of some sort might be needed. And account reconciliations is the other process that we typically go through to make sure, and within fixed assets, that counts to when you do your fixed asset roll forward schedules, there are disclosures that you need to do in your financial statement. So it's important to do the account reconciliations. And so those are all of the activities and sub-processes for fixed assets. Thank you for your time.